Okay, Ruth, welcome to your third quarter 2025 financial overview of Comcast. This one's a little bit shorter than the one I did for you in the first quarter and the second quarter. It gets a little more to the point and has a little bit less detail in it. And it's in two parts. Remember, Comcast is made up of two business segments that they operate in. One is the connectivity and platforms, and the other is the content and experiences. The connectivity and the platforms, again, is the cable operations and the Sky, and then content and experiences, as you know, is NBC Universal. So let's first take a look at connectivity and platforms. And again, we're looking at revenue on the left and then EBITDA. And remember, EBITDA is just a proxy for cash flow, for fancy accounting speak. But again, similar to what was happening in the prior quarters, is that the connectivity and platforms segment is flat or declining. The revenue has gone down a little bit, and the EBITDA has gone down even more than at a greater rate than what the revenue had gone down. And it's a similar chart I showed you last time. And they're able to raise prices. They came down a little bit in the third quarter. They're able to raise prices on an average per customer basis, but they're losing cable subscribers. And again, in the third quarter, they've gone down. And 5 years ago, they were a little shy of 52.5 million customers, and now they're a little shy of 51 million customers. And then on the content and experiences side, we move to the other segment. You see, when we're just comparing the third quarter of 2024 to the third quarter of 2025, you see the revenue has come down a bit. Again, I think what this is the Paris Olympics were the third quarter of 2024, and you didn't have those in this most recent quarter here to compare to. So revenues dropped a little bit, but you're able to raise your EBITDA a bit, and I think that's because of your opening of your Epic Universe helped quite a bit. And then if we drill down into the business units on the content and experiences, the media has come down a bit. Again, that's, I think, the Paris Olympics in conjunction with the shift from linear cable channels to streaming services. Studio's up a bit nicely. The theme parks are up real nice, I think, from Epic Universe. And then Peacock's come down a little bit. And I think that's because people subscribed and then unsubscribed to Peacock to see the Olympics. And then on the EBITDA side, the media's held its own even without the Paris Olympics. The studio's down a little bit. I don't know why, but it's down a bit. Theme parks are up nicely because of Epic Universe, and then Peacock has pared its losses by a pretty substantial amount. So I went back and took a quick look at the earnings release related to the studio EBITDA, and basically what it says is its higher costs have pushed down the EBITDA for studio. So studio film production costs are up, which is not good news for Southern California and its competitiveness. But looking at the subscribers for Peacock, you can see they're still flat, and I think that's because they've raised their prices. They haven't been able to add any new subscribers over the last 2 quarters compared to the first quarter of 2025, so they're not seeing the growth they had over the prior 4 years. So what does that all mean at the end of the day? Well, what that shows is the real bright spot is all of Ruth's fine creative work is driving the income growth at the theme parks and for the entire studio. Great job, Ruth.